Hello, everyone. Good evening. How are we doing today? Happy Mother's Day out there to all the wonderful moms. Gonna keep this short and sweet. We'll get to a few questions, but I don't see myself staying the full hour, so I can enjoy the time with the important ladies in my life. So, hope everyone's having a great Sunday. Looking forward to getting into it. Got a lot of things to share for this coming week, what I'm expecting, what I'm seeing, key levels, important things that I'll be monitoring going forward. So with that being said, we'll go through our usual inter-market analysis, starting with the dollar bond market, have a clear view of what the financial markets are doing in aggregate, the macro picture, so that then we can trade with that precision and insight in mind, whether we're Forex, index, or commodity traders. So with that, let's get right into the dollar on a monthly chart. Hey, Denisha. All right. So real quick before I get started, can I get an audio check and then we'll keep it pushing? Awesome. Thanks, David. Thanks, Denisha. Thanks, Vlad. All right, well, we'll get right into it. So looking at the dollar index on a monthly chart, we've had our attention here on this monthly fair value gap, extending that through. I was looking for us to poke down through these relative equal lows once more before going higher. And then I forecasted you guys a little further ahead that I was anticipating some type of rejection here to then send us higher. So I shared that I was anticipating a quarterly shift. And we did not see price trade through the lows, but we did see euro trade through the highs. So I'll go into the SMT, what I'm seeing, and why I'm favoring higher prices in dollar. So just keeping in mind that monthly fair value gap, trading into it, really unable to accelerate down into it, not reaching consequent encroachment. So I am anticipating bullishness for the dollar moving forward. So dropping into a weekly chart now, let's refine these levels. Looking at this fair value gap here that I've been monitoring the past couple of weeks, I did want to see price accelerate down through it on a closing basis if we were going to dig into these lower levels. But as we've seen here, we trade down to the low end beautifully, trade higher, making this fair value gap efficiently delivered, offering sell side delivery, buy side delivery. So then we've retested it and it's became a balanced price range, BPR, because this old inefficient delivery has become efficient. So then the algorithm's going to use it as support in a buy program. So we are seeing here that we took out this low with this wick here, and then we've been unable to accelerate lower. So looking at this on a weekly chart, I am seeing bullish signatures, finding support at this fair value gap, unwilling to close below it. And then we see here the low of the wicks beautifully respecting that here. So we saw a nice displacement higher last week, and this will be more clear on a daily chart. So real quick, on a weekly basis, first draw will be this inefficiency on the upside. And one thing I did want to note is how we did close above this fair value gap. So the fact that we closed above it is indicating price is bullish, and we cut through candles. So this is still a factor in my analysis. I saw how we traded into it and rejected it. So order flow is still bearish. We've now seen a shift to bullish order flow in this week, and then I'll nail down the daily and hourly and take you guys into some specifics as to what I'm seeing and why I was able to adjust. And then above this SIBI fair value gap here, animation on the upside takes us into this fair value gap here, right around the 104 on the weekly chart. So that's all I'm seeing on the weekly. Taking our attention down to the daily chart now. This blue box is that same weekly fair value gap. We see the respect for that level here. And then here is the SMT with the euro. So here, euro made a higher high, which in a symmetrical market would equate to a lower low for the dollar index. So the fact that we see the unwillingness to go lower with the correlated market is indicating bullishness. And then also with the signatures that we're seeing, the price finding support inside this weekly fair value gap, displacing higher. Let's take a look at this price action in here and see how we could have anticipated the change in state of delivery. So with this candle displacing higher here, we traded higher through this fair value gap and this volume imbalance and this bearish order block, this last up close candle. Another thing on that I wanted to mention with last week's price action is on Friday, we traded up through the mean threshold of this bearish order block. So that's the 102,398. So order flow has been bearish. This bearish order block here has been keeping price at bay, fair value gap staying below that. And then we see this week, we saw a change in state of delivery into the latter part of the week, trading through the fair value gap, through the volume imbalance, and through this mean threshold, indicating what order flow is bullish, price is seeking a premium. One other indication was this volume imbalance extending that through. We trade above it, and then we come down and find support at the high end. So we're seeing discount levels support price while we're continuously expanding to premium, which is the definition of bullish order flow. So for upside targets that I'll be looking for on the week, first target will be this high at the 102.8 level. Second objective here at the 103. Above that takes us into 103.5. And then further animation takes us into this fair value gap in here at the 103 level. And then assuming we expand through that, next target in here would be this inefficiency at the 104. So I'm looking for higher prices in dollar. So I am favoring risk on lower indexes and lower foreign currency with this in mind. Indexes have been in quite of a rut, consolidating, so I will demand a bit more price action from those assets in particular. So with that in mind, since we are seeing unclean price action, particularly in the S&P, I may shift my attention a little more towards the euro this week if I do see cleaner price action in that. However, I'm thinking that the index market should begin to loosen up. So going into this week, what would invalidate my bullish bias? If we trade back down through this volume imbalance and what is now a bullish mitigation block, low, failure swing, trading higher, last up close candle in that price range is our bullish mitigation block. So I would not want to see that level violated. We can manipulate lower and then expand higher is what I'll be favoring. So now dropping down into a hourly, further confirmations that price was bearish. Starting here, we see a displacement on the upside in Wednesday into CPI's price action. We then had a bullish breaker. Why is this a breaker? Low, lower, low. Highest up close candle within this price range. Extend that through. Bodies beautifully respecting that level. Did not violate it. So we're finding support inside the breaker. Displacement higher through the highs. And we can clearly see the displacement here as we see the inefficient delivery on the upside. Trade down into what level? This candle's high. Why don't we need to go below that to trade into this part of the fair value gap? Because this has already been efficiently delivered. We've offered buy side, sell side, and then left this price range. So there's no reason for price to need to come deeper into that fair value gap because the efficient delivery ended here, and this is where we became inefficient on on sell side delivery, making this a busy. So we trade lower, stop there. That's the reason for that. Displacement higher, trading into this fair value gap, unable to even reach consequent encroachment, indicating the market's extremely bullish. And we saw this thing continuously ripping into Friday's trading. So with that being said, going into the following week, I will be looking for something similar to this, trading down into that level, being this fair value gap on the hourly, and then trading higher into my upside objectives. If we start trading through these levels with speed, then that would invalidate my bullish bias, and then I would just have to demand more information until I'm on side. So now with that being said, let's go into the bond market. So failure to accelerate on the upside also canceled my bearish bias or stance on the dollar index. Given that we've tried multiple times to rally and have failed, I'm now favoring lower prices on the bond market, even in this consolidation. I do see how we got back below this fair value gap. We're seeing the bodies respected here. And then we also have a closed candle here, which I would want to see keep price at bay. Looking at these relative equal lows here, this is the sell side liquidity I'll be favoring price expanding into. Also putting upward pressure on dollar. So sell side would be my first draw for this week, and then further displacement to the downside takes us into this discount fair value gap. So I'll be looking for the bond market and dollar index to get an alignment to give us that symmetrical, clean delivery that we typically expect. One more thing before we get into the index markets, looking at the 30-year yield or 10-year yield, and then I'll overlay it. Key SMT on the index markets as well. So higher time frame SMT going up to a weekly chart. We see that the 30-year yield is unwilling to make lower lows while the 10-year yield is. So that's indicative. Now also looking at the daily chart, we also have a lower time frame SMT. Here, where 30-year yield refused to make a lower low, whereas the 10-year did here. So I'm favoring upside on interest rates, which would further give lift to dollar. First targets will be these relative equal highs in here, and then same as on the T-bonds, I will be looking for this fair value gap in here to be the ultimate draw to give us that risk on bias. So going into the indexes now. Jonathan, hi Dylan. The question I have is, what tools do you use to change / switch last week's analysis from bears DXY to what we actually ended up having, instead the opposite? So I think I covered that, doing the top down from the daily down into the hourly. If there's further things you want me to cover on that, feel free to ask. I'm pretty sure I did cover it, but if you want me to clarify something, feel free to let me know, Jonathan, and I'll take care of that. So looking at the E-mini S&P on a weekly, we have been seeing bullish order flow up into premium levels. I was looking for the ES to trade above this high into this volume imbalance and liquidity void in here where there was no trading. It did not give us that, but what did was the NASDAQ. So NASDAQ did continuously make higher highs, and it did deliver into the levels we were looking for, being this volume imbalance in here. So this is key insight, the fact that the S&P was being held lower, as well as the Dow. Dow was not permitted to trade higher while the NASDAQ was. So that gives us insight into that. How do I want to say this? So I'm forecasting that the fact that ES was being held, that's giving us further insight into a SMT that we will now go lower. So using the intermarket analysis, now that I'm bullish dollar, it's showing bullish signatures. I would want to also see index markets bend a knee to that and start delivering lower. So the SMT I'm referring to on the weekly chart with NASDAQ. New pane. Okay, here we are. So here we see NASDAQ made a higher high, whereas S&P and Dow failed to. So this is insight to me that these assets are under accumulation of shorts. So what I will want to see to confirm that is, of course, a bullish dollar. And then I would want to see us accelerate through this fair value gap here on the downside and start expanding towards these relative equal lows. So that's what I'm seeing here on a weekly, dropping down into our daily chart. So that SMT again is here. NASDAQ made that higher high, Dow and S&P failed to. So the reason that S&P was much more difficult to read this week is because we were pretty much consolidating in no man's land. I remember I shared this in the dollar index either last week or the week before that. Low probability is when the market is consolidating near equilibrium. So here we see that from the dealing range high to low, price is just consolidating around that 50% level, which makes it a difficult read. As in a trending market or a market that's looking to get somewhere, we want to see discount traded to quickly and left if bullish, or premium traded to and quickly left if bearish. We're not seeing that, so it's pretty much in a sideways consolidation, and we have been here for some time, going on about a month now. So I would want to see us break out of this range, more specifically to the downside. So taking a look at some things here. For the daily charts, we do have a 3 drives higher, inability to accelerate above it. What does that mean? So yes, we did trade above these highs, but is it like we traded up this high where we displaced through it with energy, or is it an anemic, weak run higher? So I'm seeing this as weakness because we're unable to sustain the highs and then we displaced lower. Also, in concert with the SMT and the bullish dollar, I will be favoring lower prices. So looking at this BPR above market price, traded up into consequent encroachment 50%, rejected that lower, indicating the market's weak, but we also are stuck in between this discount fair value gap in here. So as long as we remain inside this range bound consolidation for ES, this will be low probability to me. So how am I trading this? How am I running my trading business in these market conditions? So my trade frequency is dialed back significantly and my risk is reduced. Last week, I made 2.5% on an account, and that's it for me. I'm not looking to push it, violently raise my equity in these conditions, because it's not conducive to do that. Trying to do that will blow your account, especially in these conditions. So I look at what I'm trying to get. I manage my expectations accordingly, take bread and butter setups, get in, get out, get my money, and I'm done. I'm not looking to push it over trade, especially in these environments, as that's what more typically inexperienced traders will do. And that's why they find difficulty, because you're trying to push it in an environment that's not conducive to big price runs that are going to give you large ranges to work with. So keeping in mind the market profile we're trading in and how we need to adapt accordingly. So dropping down into our hourly chart. As I've mentioned, premium the discount, range bound, right at equilibrium, indicating what? Sloppy trading conditions. So for those of you guys that are keeping up with ICT, why was he favoring the NASDAQ? NASDAQ, because it's been having much cleaner price action top down. So I'll counsel you guys to look at this on a weekly. It's much cleaner, 4-hour, much cleaner price delivery. So we are seeing cleaner delivery on NASDAQ, and it's showing a willingness to want to rally, whereas Dow and S&P are not. So this is why this would be the relative strength leader and the one we would want to trade if we're buying. If we're going short, S&P was the one to short. So another thing that I like on this hourly chart is how we've made multiple runs higher on buy side. Once, twice, 3 times, 4 times, 5 times, 6, 7 times. We've taken out buy side with short anemic runs without displacing through it. And then we've displaced lower through this intermediate term low, indicating to me a market structure break. So moving forward, we could poke up above these highs, but I would want to see a rejection and trade lower into sell side here, here, and here for the NASDAQ. And I would want to see something similar on S&P. Given that we rejected this fair value gap on the hourly last week, unable to trade above it, 50% of this wick, unable to reach it, 50% of this wick in here, unable to reach it. What's that indicating? Price is bearish, and then coupled with the SMT, lower prices is what I favored. So going into this week, we now have relative equal lows here, and let me go up to the daily to give my price targets. So the week before last, low in here would be my first objective. Second will be this fair value gap in here, and then further animation, which I'm not expecting given the conditions we're in, but further animation takes us to this candle's high, which would be a fulfill of that fair value gap. So that's what I'm expecting for the index markets, lower, assuming dollar continues to rally. So with that said, I think that's everything. Let me check my notes real quick. Yep, that's all I had to cover. So I'll get to questions now. Hey, Patrick, thanks for watching, my man. Appreciate you joining us, and thanks for the feedback. Glad it's helpful. ZK Sync, hello Dylan, good day. My question is, if there's a volume imbalance on a 1 day, should it be refined up to the 15 minutes to nest with multiple PD arrays? And for how much time can a volume imbalance be used? So that's a great question. So for volume imbalances, you want to look at them on the highest time frame that they're on. So for example, let's say there's a 5 minute volume imbalance, but then you go up to a 15 minute and that same volume imbalance is still there. You want to refer to it on that highest time frame. Once a body is laid through that volume imbalance, then that typically negates it for me, and I typically won't use it in my analysis moving forward, depending on the situation. On a daily volume imbalance, I will use that for days in the future, even once a body has been traded through it. However, in the lower time frames, once we lay a body through a volume imbalance, it's no longer significant in my analysis. So I think that answered your question. The highest time frame, you want to use that volume imbalance. For fair value gaps, those you can refine into your lower time frames, as you were saying, to find nested PD arrays, as that's typically a level the algorithm will want to refer to. So for example, let's say we have an hourly fair value gap BISI on the upside. Well, on the 15 minute, it'll be a different range within that same hourly fair value gap. And then on the 5 minute, it'll be even more refined all the way down into the 1 minute. And then you can start dialing in the precision as you refine the inefficiencies down through the time frames. Christopher, hey Dylan, could you do gold? Absolutely. So I've been monitoring gold. Gold's been having my interest. As I've been giving you guys the past few weeks, the bias has been bullish, obviously because we've had bearish dollar. So because gold is priced in dollars, a lower dollar will give some lift to gold. So we've traded up higher into this high here, but we also have this high here. So now I'm seeing relative equal highs. So before going lower is what I'm favoring. I would want to see us trade up into these highs once more, make a new all-time high, absorb that buy side, and then I would want to see some type of displacement lower on a hourly or 4-hour basis to then confirm a shift in market structure. But for right now, as long as we stay above this down close candle on the weekly basis, I will be expecting higher prices, with the draw being these relative equal highs. Dropping down into a daily. So I am seeing bearish order flow on a daily. I've seen we've made multiple highs, been unable to sustain them. Displacement lower. Volume imbalance here, holding price. Now we have relative equal lows here. So I would be interested to see if maybe we run down to these lows before going higher. Gold isn't that clear to me. The reason I don't like trading it intraday is because of the consolidations it'll go into. It almost reminds me of Bitcoin or Ethereum, where when it moves nicely. But then you have to wait through 10, 15 days of just sideways price action. So that's what makes it unclean to me right now. So personally, this one's 50-50 to me, but as long as we remain above this up close candle in here, I favor higher prices into the equal highs. Trading down through this low and closing below it indicates that we're likely going to seek a deeper discount into these relative equal lows here and potentially these lows in here. Olawale, hi Dylan. For SMT, how do you differentiate between when trade can be taken based on SMT divergence and when thick sister approach? Where you wait for the weak one to catch up? So SMT as contrasted to Six Sister, I use the SMT for confirmation for a bias I'm already looking for. So for example, since I am favoring lower prices and indexes, that SMT wasn't the sole reason for it. It's just an additional confirmation. With Six Sister, that's specifically when we have, for example, let's say, I'll show you an example on the index markets. Go to the continuous contract. Okay. So here, because we see that the Dow has already reached this high around the December time, let's contrast that to NASDAQ. It was significantly lower around the same time. It wasn't even close to the external range liquidity at this high. Here, let me extend that so it's cleaner. So NASDAQ was not even close to this high here, whereas the Dow took it out. So because the NASDAQ was significantly behind the Dow in terms of delivery to the premium objectives, once the Dow reached that and then we were bullish indexes, which one do you want to be buying? The index that already reached that high here, or the one that has to catch up? So let's contrast this price action here on Dow with NASDAQ here. This would be the better buy. Why? Because it's significantly behind it. So it would be the sixth sister looking to catch up with Dow and SPOOs. So that's how I use SMT and sixth sister. Sixth sister is more within a narrative where I'm already looking for higher prices or lower prices, and then I'll just look for the one that hasn't caught up to it. With SMT in particular, that's already with the framework I'm looking for to just have that additional algorithmic confirmation that the bias I'm looking for is on side. Hey Dylan, do you live stream from AM/PM session tape reading? I have not, but I've gotten quite a few requests to do that. So potentially maybe sometime in the next few months or the end of the year, that's something I will look to do. Maybe do some live tape reading. I don't know with regards to trading live, not that I wouldn't want to. I don't know. I'd have to look with the regulations here and see if that's something I could even do, because the last thing I want to do is have any run-ins with the SEC. So with that being said, I may do some live tape reading. That'll be something I'd be interested in. I've been having quite a few requests to do that. So that's something I'll potentially look to do here in the future. Denisha, hey Dylan, haven't been able to keep an eye on oil. Do you have the same outlook from last week? Thanks again. Thank you. Yeah, let's go ahead and take a look at crude oil. So I did not like how we closed last week on a weekly chart. We wicked higher, so we were bullish. Where was the predominant movement? Looking at this candle from the open, did we move more on the upside or the downside? Clearly the upside. So the bias in terms of being bullish was right on last week, trading back up into the inefficiencies on a daily chart. However, I'm not liking upside continuation because of the failure to accelerate through. What I'm seeing here is that we traded down into this level, and David, Wade, Earl, I know you guys know what this is, but here we have our balanced price range. Why didn't we need to go any higher? Because the efficient delivery was from this candle's low to this candle's high, and then we left it. So we hit the high end of this candle, which is also a bearish order block, but it's also efficient delivery because it's already offered both sides of the market and left it. So we don't need to go higher into this fair value gap, and it's going to stop here on a dime. So the fact that then we rejected that is giving me insight that we are bearish. So why was I bullish? Because we rejected the sell side and I was bullish into this fair value gap in here. And then I would need to wait for more information. What's the market showing me? Are we willing to expand through it or expand below it? And we have not seen a willingness to expand higher. Price has traded lower off this high here, indicating bearish order flow. Back to the weekly, we also have a BPR here, extending that through where these two fair value gaps overlap. Extend that through, unable to really rally through it. We traded right down to this candle's low on the week of April 24th. So I'm seeing this as an immediate rebalance, which we trade right into the candle's low before it, not wanting to go any higher, creating a fair value gap. So I will be looking for lower prices in oil. Right now, though, we're in between two key levels, being this BPR in here and this fair value gap here above market price. So as long as we remain between these key levels here, my analysis is going to be 50-50. So do we find support in here and trade higher, or do we continue accelerating lower? So I feel we'll have this insight early into the week next week. Are we willing to find support and go higher, or expand lower through this? Expanding lower through this takes us into the rejection block here. into 50% of the wick, and then all the way down to external range liquidity, assuming we get acceleration. If we find support inside these discount levels, then I would want to see these up close candles traded to and through, taking us to these relative equal highs. So just as a disclaimer, I'm not long-term bearish oil. I do eventually see these relative equal highs here being in play and oil trading much higher. We just need to wait for the market to show its hand that it's willing to do that. So that's what I'll be monitoring here moving forward. Lotus, amazing work. Please keep me updated when you open your mentorship. We need it. Thank you very much. I will let you guys know. Thank you, Arlene. Great job as always. Appreciate that. Christopher Leon, thank you, Dylan. Thanks for sharing your time with us, my man. Sana, thank you so much for the value. Can you quickly let me know what you see on PLTR, Palantir? Is there any area for a buy? And I've been in for a long-term investment. Okay, yeah, let me go and take a look at Palantir. It's been a while since I've looked at these individual stocks. Last I've seen, it was getting smashed. PLTR. Oh, wow, okay. Considerable bullishness on this. Okay, let's go up to a weekly. So, wow, yeah, huge drop down since the COVID highs. So I am liking how we have formed on a weekly basis a intermediate term low. Price is showing a willingness to rally. What I would want to see is expansion higher through this high into here and showing no willingness to slow down inside this bearish order block. So I would want to see expansion higher on the upside. Looking on a monthly chart, order flow is bearish, so I don't want to call a top or bottom, but I am liking how we traded through this low and rejected it. We are in a deep discount, and we do have quite a few inefficiencies on the downside. So for bullishness in this particular stock, I would need to see expansion through the highs and not showing a willingness to slow down in the order blocks on a weekly. I'm not going to go down into a daily because it'll probably be very spotty and sloppy, and yeah, I can't read a chart like that. So that's what I'm seeing on a weekly basis. So since you said it's a longer term investment, hopefully that gives you more clarity with regard to the higher time frames. Thanks, Lotus. I appreciate that. Thank you. ZK Sync for OB down / up close candles. If there's a big wick, upside / downside, is wick more reactive than body? Thank you. Yeah, absolutely. Let me go ahead and cover that. That's something I've shared a few times, but I'll cover it again. So let's look at a daily chart. Let's look at pound. So whenever there is a big wick, I will expect the sensitive price level to be the high to the opening price of that candle for a reaction. So what I will look for is a reaction in the wick specifically. When there is a big body, for example, like this bearish order block on dollar index, send that through, I would expect a reaction at the mean threshold because it's a pretty stubby wick. So I will look for mean threshold. So big body, I look at the mean threshold. When it's an elongated wick, I'll look at the high to the opening price. So specifically, I'll look for the wick for sensitivity for the order block. So Soren, I hope I got to your question regarding what opportunities we're seeing, laid it out in terms of risk on, risk off. What we're seeing here for the euro. Well, actually, I did not cover euro, but it's obviously the opposite of dollar, but I'll go ahead and cover that. So given here that we saw that SMT where dollar failed to make a lower low while euro was making that higher high, we're now expanding lower. I do like us ripping into this liquidity. Whenever I see trend lines like this, I love to fade these trend lines into that liquidity. So given that we've had multiple attempts to rally failed, we're also seeing a bull flag, which is something we like to fade because I'm not interpreting this as a bull flag. I'm interpreting this as price has been held in what? A premium above this high, and we've failed to rally. So now that we've displaced lower, trade it through this low here, shifting market structure. I am now favoring these lows down here to be traded to on euro. So given that we have this, let me take this off before. So I'm not trading the trend line, just to cover that. We're looking to fade that. So what I will be looking for is this low as a first target here at the 108. Further animation on the downside takes us into 1.079, and then down through that takes us into the 1.07 even. So that's what I'll be looking for on euro, and same thing on pound. So we also have a SMT between pound euro. Bringing that up here. So here euro failed to make this higher high, whereas pound did. So pound was the stronger pair. So I do actually have a video coming out on how to trade when the majors are in consolidation. So in this example here, we see euro's been range bound and pound, or euro's been range bound here as well as pound. So what do you do as a Forex trader? What would I be doing if I traded Forex? I will share with you guys how I use the cross pairs, how I find a bias, and how I trade them, aligning the technicals with the fundamental bias I'm seeing. So that'll be posted either tonight or into tomorrow. So be sure to stay tuned for that. So yeah, thank you, Soren C, for your question. Hopefully I've answered that. And Earl, great job, Dylan. Really appreciate you. Thank you, my man. Thanks for joining us. All right. Well, as I said, I was planning on keeping it short and sweet. So with that being said, I'll let you guys all go. I'm going to be enjoying my time here with my special ladies and looking forward to another great week. So with that being said, the recording will be uploaded as usual. Please give me a like on the way out. It helps out the channel, helps us out here at Adora Trading. And I will be much more active in the Telegram now. I'll be hanging out there with you guys a little more, sharing analysis, what I'm seeing, helping you guys out with answering questions. So stay tuned for that. And any updates or things I'm seeing that are pertinent to the markets, I will be keeping you guys abreast as to what I'm seeing throughout the week. So with that being said, everyone, have a great rest of your Sunday. Good luck and good trading.